Question 1. Which of the following is the primary purpose of the underwriting process in insurance? A. To determine the pricing of policies based on geographical risk factors. B. To assess the insurability of an applicant by evaluating risks and deciding whether to accept, reject, or modify an insurance application. C. To collect and verify the medical history of applicants. D. To create marketing strategies for insurance products. Answer. B. To assess the insurability of an applicant by evaluating risks and deciding whether to accept, reject, or modify an insurance application. Explanation. Underwriting is the process where an insurance company evaluates the risks involved in insuring a person or asset. The main goal of underwriting is to decide whether to accept or reject an application for insurance based on the risk profile of the applicant. This includes evaluating factors like age, health, occupation, and other underwriting criteria. Underwriting also determines the policy terms and premiums. Options A, C, and D are related to elements that may be part of the broader insurance process but do not define the core function of underwriting. Question 2. Scenario question. Mr. Smith is a 45-year-old individual with a history of high blood pressure and is applying for a life insurance policy. He also works in a high-risk occupation, driving a delivery truck. When his insurance application is being processed, the underwriter must consider various risk factors. Which of the following actions should the underwriter take to evaluate Mr. Smith's insurability? A. Accept the application as is without any modifications, as his age and occupation are within normal limits for life insurance. B. Reject the application immediately due to the applicant's high-risk occupation and medical history. C. Assess Mr. Smith's medical history and occupation and offer modified policy with higher premiums based on the identified risks. D. Ignore Mr. Smith's medical history, as his occupation alone is sufficient. Determine his eligibility for coverage. Answer. C. Assess Mr. Smith's medical history and occupation, then offer modified policy with higher premiums based on the identified risks. Explanation. The underwriter must carefully evaluate both Mr. Smith's medical history, high blood pressure, and his occupation, high risk due to driving. Based on this evaluation, the underwriter may decide to offer coverage but modify the terms, such as increasing premiums to compensate for the higher risk. Is common practice in underwriting when dealing with individuals who present increased risks due to health or occupational factors. Rejecting the application, option B, is not always necessary, as underwriting can still find ways to offer coverage with modifications. Option A is incorrect because ignoring these factors would not comply with sound underwriting practices. Option D is incorrect as the underwriter must consider both the medical history and occupation. Question 3. Which of the following is the most important factor when underwriting a property insurance policy? A. The applicant's personal financial status. B. The applicant's geographic location and exposure to environmental risks. C. The applicant's previous claim history. D. The applicant's occupation and income. Answer. B. The applicant's geographic location and exposure to environmental risks. Explanation. When underwriting property insurance policy, the most critical factor is the property's exposure to environmental risks, such as proximity to flood zones, earthquakes, or areas prone to wildfires. These factors significantly impact the potential risk to the insurer, while financial status, option A, and previous claim history, option C, are secondary when evaluating the underlying risk to the property itself. The applicant's occupation and income, option D, are not as relevant to property underwriting as they do not directly affect the risk associated with the property. Therefore, understanding the environmental risk specific to the location of the property is paramount in determining appropriate coverage and premiums. Question 4. Which of the following is the most important consideration when underwriting a life insurance policy for an applicant with a pre-existing medical condition? A. The applicant's occupation and daily activities. B. The applicant's age and gender. C. The severity and management of the pre-existing medical condition. D. The applicant's income and financial stability. Answer. C. The severity and management of the pre-existing medical condition. Explanation. When underwriting life insurance, an applicant's medical history and pre-existing conditions are crucial factors. The severity of the condition and how well it is managed directly influence the risk the insurer is taking on. For example, well-controlled hypertension presents the lower risk than uncontrolled hypertension, while age, option B, and occupation, option A. Also important, The primary focus in this case should be on the pre-existing condition and its management, as it most directly affects the applicant's life expectancy and overall risk profile. Question 5. Which of the following is an ethical consideration that must be adhered to when underwriting an insurance policy? A. Offering different premiums based solely on the applicant's race or gender. B. Discriminating against applicants with pre-existing medical conditions. C. Ensuring that underwriting decisions are based on the applicant's risk factors, not on personal biases. D. Withholding coverage for applicants with high credit scores. Answer: C. Ensuring that underwriting decisions are based on the applicant's risk factors, not on personal biases. Explanation: ethical underwriting involves making decisions based solely on the applicant's objective risk factors such as age, health, occupation, and claims history. It is unethical and illegal to discriminate based on factors such as race, gender, or other personal characteristics not directly related to risk. Options and B. Credit scores, option D, should not influence the decision to withhold coverage unless there is clear correlation with financial risk. Therefore, underwriting decisions must be fair and impartial, based only on relevant risk factors. Question 6. Scenario question. Sarah is applying for a homeowner's insurance policy. The underwriting process reveals that her home is located in a flood-prone area and has had 2 prior claims for water damage. As the underwriter, how should you approach the situation? A. Approve the application without any changes, as the flood-prone area doesn't significantly affect the underwriting process. B. Reject the application outright due to the history of water damage claims. C. Offer policy with higher premiums and or exclusions for water damage to reflect the increased risk. D. Accept the application and offer full coverage for all damages, including water damage, without any adjustments. Answer: C. Offer a policy with higher premiums and or exclusions for water damage to reflect the increased risk. Explanation: in this scenario, Sarah's property is located in flood-prone area and it has history of water damage claims, which increases the risk for the insurer. The appropriate underwriting decision would be to offer policy with higher premiums to account for this risk and or exclude coverage for water damage specifically. Option B is too extreme, as rejecting the application outright may not be necessary, but adjustments should be made. Option D is incorrect, as offering full coverage without modifications would not adequately reflect the risks involved. Question 7. What is the purpose of using predictive models and data analytics in the underwriting process? A. To increase premiums for all applicants. B. To more accurately assess the risk by analyzing large sets of data and trends. C. To avoid any underwriting decisions based on personal assessments. D. To automate the approval process for all standard applications. Answer: B. To more accurately assess the risk by analyzing large sets of data and trends. Explanation: predictive models and data analytics allow underwriters to make more informed decisions by analyzing large volumes of data, identifying trends, and predicting future risks. This improves the accuracy of underwriting assessments by taking into account factors that may not be obvious through traditional methods. Option A is incorrect because the goal is not to raise premiums but to fairly assess risk. Option C is not correct, as personal assessments are still necessary for many factors. Option D is also incorrect because predictive models are meant to improve risk assessment, not to automate decisions without human oversight. Question 8. Which of the following is typically a characteristic of a substandard insurance risk? A. The applicant poses a minimal risk and is classified as preferred. B. The applicant has a history of several claims or a serious medical condition that increases risk. C. The applicant has an excellent credit history and low exposure to risk. D. The applicant is in a high-risk occupation but has no health problems. Answer: B. The applicant has a history of several claims or a serious medical condition that increases risk. Explanation: substandard risks are applicants who present higher than normal risks due to factors such as a history of frequent claims, serious medical conditions, or other circumstances that increase the likelihood of a claim. These applicants may be offered coverage, but at higher premiums or with exclusions. Option A refers to preferred risks who are considered low risk. Option C describes a standard or preferred applicant, not a substandard risk. Option D describes someone who may be considered high risk due to occupation, but not necessarily substandard unless health issues are present. Question 9. Which of the following is the primary purpose of the Fair Claims Settlement Practices Act in Illinois? A. To regulate the premium rates charged by insurance companies. B. To ensure that insurance companies treat policyholders fairly when settling claims. C. To provide tax incentives for insurance companies in Illinois. D. To mandate the approval of insurance policies by the state government before issuance. Answer: B. To ensure that insurance companies treat policyholders fairly when settling claims. Explanation: the Fair Claims Settlement Practices Act in Illinois is designed to protect policyholders by ensuring that insurance companies handle claims fairly and promptly. This includes requiring insurance companies to make reasonable settlement offers, not delaying claims unnecessarily, and addressing claims in good faith. Options A, C, and D are incorrect, as they do not reflect the Act's main purpose of protecting consumers in the claims process. Question 10. What role does reinsurance play in the underwriting process? A. It is used to assess the claims history of individual applicants. B. It helps insurance companies spread and manage risk by transferring a portion of the risk to another insurer. C. It increases premiums for policyholders to account for the cost of transferring risk. D. It is only applicable to life insurance underwriting and not property or casualty insurance. Answer: B. It helps insurance companies spread and manage risk by transferring a portion of the risk to another insurer. Explanation: reinsurance is a risk management tool used by insurance companies to spread the risk of large claims by transferring a portion of that risk to another insurer. This helps prevent a single insurer from taking on too much risk and provides financial stability in the event of catastrophic claims. It applies to all types of insurance, including life, property, and casualty, so option D is incorrect. Reinsurance does not directly affect premiums, option C, but it plays a key role in managing risk for the insurer. Option A is also incorrect because reinsurance does not assess individual applicants' claims history. Question 11. Which of the following types of insurance coverage is typically used to protect an insured from financial loss due to legal action for negligence or misconduct? A. Health insurance. B. Professional liability insurance. C. Homeowners insurance. D. Life insurance. Answer: B. Professional liability insurance. Explanation: professional liability insurance, also known as errors and omissions (EO insurance), protects professionals against legal actions for negligence, errors, or misconduct in the performance of their professional duties. Health, homeowners, and life insurance are for different types of coverage. Question 12. Which of the following is a feature of term life insurance? A. It provides coverage for the entire lifetime of the insured. B. It accumulates cash value over time. C. It provides coverage for a specific period of time, such as 10, 20, or 30 years. D. It guarantees that premiums will never increase. Answer: C. It provides coverage for a specific period of time, such as 10, 20, or 30 years. Explanation: term life insurance provides coverage for a specific term, e.g. 10, 20, or 30 years, and pays a benefit if the insured dies within that time frame, does not accumulate cash value, nor does it provide coverage for life. Question 13. Scenario question. Michael has been paying premiums on his homeowner's insurance policy for several years. Recently, his property was damaged by a fire and he submitted a claim. The insurance company denies the claim, stating that the fire was caused by a violation of building codes. Which of the following is the most likely reason for the denial? A. Michael failed to pay his premiums. B. The fire was caused by an excluded peril in the policy. C. Michael's policy had expired. D. The insurance company found fraudulent activity. Answer: B. The fire was caused by an excluded peril in the policy. Explanation: many homeowners' policies exclude coverage for damages resulting from violations of building codes or other factors related to neglect or improper maintenance. Therefore, if the fire was caused by such a violation, the insurer may deny the claim. Option A is incorrect because Michael is not mentioned as missing premium payments, and option C suggests that the policy expired, which is not stated. Option D would apply if fraudulent activity was proven. Question 14. Which of the following is not a typical exclusion in a standard homeowner's insurance policy? A. Damage from earthquakes. B. Damage from flood. C. Damage caused by wear and tear. D. Damage caused by vandalism. Answer: D. Damage caused by vandalism. Explanation: standard homeowners insurance policies typically exclude coverage for damage from earthquakes, floods, and wear and tear. C. However, damage caused by vandalism is generally covered under a homeowner's policy as it is not considered an excluded peril. Question 15. What is the purpose of an insurance policy's deductible? A. It is the amount the insurer will pay out in the event of a claim. B. It is the amount the insured must pay before the insurance policy starts paying. C. It is the amount the insurer charges for issuing the policy. D. It is the amount the insured will pay as a monthly premium. Answer: B. It is the amount the insured must pay before the insurance policy starts paying. Explanation: a deductible is the portion of a loss that the insured is responsible for before the insurer begins to pay for the remaining damages. High deductibles typically result in lower premiums, but it means the policyholder bears more of the initial risk. Question 16. Which of the following is an example of an occurrence policy? A. A life insurance policy that pays out upon the death of the insured. B. A homeowner's insurance policy that covers damages occurring during the policy period, regardless of when the claim is filed. C. A commercial general liability policy that only covers injuries occurring during the policy period and reported within the policy period. D. A term life insurance policy. Answer: B. A homeowner's insurance policy that covers damages occurring during the policy period, regardless of when the claim is filed. Explanation: an occurrence policy covers incidents that occur during the policy period, regardless of when the claim is reported. This is typical of homeowners' policies, which provide coverage for damages even if the claim is made after the policy period ends. Option C is an example of a claims-made policy. Question 17. What is the primary benefit of having umbrella insurance coverage? It provides high-level coverage for a variety of claims, such as liability over and above existing policy limits. B. It covers the full cost of property damages in the event of a natural disaster. C. It eliminates the need for health insurance. D. It pays for the insured's medical expenses in case of injury. Answer: A. It provides high-level coverage for a variety of claims, such as liability over and above existing policy limits. Explanation: umbrella insurance provides additional liability coverage above the limits of underlying policies, such as homeowners or auto insurance. It is designed to protect against large claims or lawsuits that could exceed the coverage provided by these policies. Question 18. Which of the following is a common exclusion in a standard automobile insurance policy? A. Damage from an accident caused by the insured. B. Damage caused by the insured's intentional actions. C. Theft of the insured vehicle. D. Injury to passenger in the insured's car. Answer: B. Damage caused by the insured's intentional actions. Explanation: insurance policies generally exclude coverage for damages caused by the insured's intentional actions. Insurance is meant to cover unforeseen accidents, not deliberate harm. Options A, C, and D are typically covered under standard auto insurance policies. Question 19. In the context of life insurance, what does the term insurable interest refer to? A. The beneficiary's emotional attachment to the insured. B. The financial or other interest that a person must have in the life of the insured in order to purchase a policy. C. The premiums paid by the policyholder. D. The type of insurance coverage purchased. Answer: B. The financial or other interest that a person must have in the life of the insured in order to purchase a policy. Explanation: insurable interest is a requirement that the policyholder must have a legitimate financial or emotional stake in the life or well-being of the insured. For example, a spouse or business partner may have insurable interest, but a stranger would not. Question 20. What is the key difference between an insurance broker and an insurance agent? A. An insurance broker works directly for an insurance company, while an agent represents multiple companies. B. An insurance agent represents multiple companies, while a broker works for one specific company. C. An insurance broker acts on behalf of clients and represents various insurers, while an agent represents a single insurer. D. Both brokers and agents work directly for the insurer, though brokers offer more discounts. Answer: C. An insurance broker acts on behalf of clients and represents various insurers, while an agent represents a single insurer. Explanation: an insurance broker works on behalf of clients and can represent a variety of insurance companies. In contrast, an insurance agent typically represents a single insurer and works to sell that insurer's products. Brokers have the flexibility to shop for policies across multiple carriers. Question 21. Which of the following is a type of insurance coverage that helps protect a business from legal claims for injuries or damages that occur on its property? A. Workers' compensation insurance. B. Property insurance, C. General liability insurance, D. Auto liability insurance. Answer: C. General liability insurance. Explanation: general liability insurance helps businesses protect themselves from legal claims related to injuries or damages occurring on their premises or due to business operations. It covers claims for bodily injury, property damage, and other liabilities. Question 22. Which of the following is an example of a named peril policy? A renter's insurance policy that covers all risks except those specifically excluded. B. A homeowner's policy that covers only specific risks listed in the policy. C. A life insurance policy that pays a death benefit regardless of the cause of death. D. A commercial insurance policy that covers all employee injuries. Answer: B. A homeowner's policy that covers only specific risks listed in the policy. Explanation: a named peril policy specifies the risks it will cover, such as fire, theft, or vandalism. If the peril is not listed, it is not covered. Option A describes an open peril policy which is more comprehensive. Question 23. Scenario question. John is applying for life insurance and is asked about his smoking habits. He discloses that he occasionally smokes cigars. What impact is this most likely to have on his insurance application? A. His premiums may be lower because he is a non-smoker. B. His premiums may be higher due to the increased health risks associated with smoking. C. His application will be automatically denied. D. His premiums will remain the same as occasional smoking is not a significant risk factor. Answer: B. His premiums may be higher due to the increased health risks associated with smoking. Explanation: smokers, even occasional smokers like John, are considered higher risk due to the increased likelihood of health issues such as respiratory diseases or heart problems. Therefore, his premiums are likely to be higher as a result. Question 24. Which of the following types of insurance is primarily designed to protect the policyholder's income if they become disabled and are unable to work? A. Disability insurance. B. Health insurance. C. Life insurance. D. Workers' compensation insurance. Answer: A. Disability insurance. Explanation: disability insurance provides income replacement if the policyholder becomes disabled and unable to work due to illness or injury. It is not meant to cover medical expenses, health insurance, death, life insurance, or work-related injuries. Workers' compensation. Question 25. What is a beneficiary in the context of a life insurance policy? A. The person or entity responsible for paying premiums on the policy. B. The person or entity who receives the death benefit when the insured passes away. C. The person or entity that owns the policy. D. The person or entity that underwrites the policy. Answer: B. The person or entity who receives the death benefit when the insured passes away. Explanation: a beneficiary is the individual or entity designated by the policyholder to receive the death benefit in the event of the insured's death. This can be a family member, friend, trust, or charity. Question 26. Which of the following is an example of collision coverage under an auto insurance policy? A. Coverage for medical expenses related to an accident. B. Coverage for damage to your car caused by hitting another car or object. C. Coverage for theft of your car. D. Coverage for repairs needed due to general wear and tear. Answer: B. Coverage for damage to your car caused by hitting another car or object. Explanation: collision coverage helps pay for damages to your car if you are involved in an accident, whether or not you are at fault. It specifically covers damages resulting from collisions with other vehicles or objects. Question 27. What is a key characteristic of whole life insurance? A. It provides coverage for a specific term and expires. B. It does not accumulate any cash value. C. It provides lifelong coverage and includes a savings component. D. It has lower premiums than term life insurance. Answer: C. It provides lifelong coverage and includes a savings component. Explanation: whole life insurance provides coverage for the entire life of the insured as long as premiums are paid. It also includes a cash value component which grows over time and can be borrowed against or used to pay premiums. Question 20. Which of the following is considered a peril under a standard homeowner's insurance policy? A. Flood. B. Earthquake. C. Fire. D. War. Answer: C. Fire. Explanation: a peril is a risk or cause of loss covered by an insurance policy. Fire is typically considered a covered peril under a standard homeowner's policy. Flood and earthquake are usually excluded and would require additional coverage, while war is generally excluded as well. Question 29. Scenario question. Sarah has a standard auto insurance policy with comprehensive coverage. One night, a hailstorm damages her car, creating significant dents. What type of coverage is most likely to pay for the repairs to her vehicle? A. Collision coverage. B. Comprehensive coverage. C. Liability coverage. D. Uninsured motorist coverage. Answer B. Comprehensive coverage. Explanation. Comprehensive coverage protects against damages to the insured vehicle caused by events other than collisions, such as hail, theft, vandalism, or natural disasters. Since the damage was caused by a hailstorm, comprehensive coverage would apply. Question 30. What does the term underwriting refer to in the insurance industry? A. The process of issuing insurance claims. B. The process of determining the insurer's profitability. C. The process of evaluating and accepting risks to determine policy eligibility and premiums. D. The process of managing policyholder accounts. Answer C. The process of evaluating and accepting risks to determine policy eligibility and premiums. Explanation. Underwriting is the process by which insurance companies evaluate the risk of insuring a person or entity, determine whether to accept or reject the risk, and set the appropriate premium rates. Underwriters assess various factors such as health, age, occupation, and claim history.